So here's the thing, the market has definitely lost a lot from the highs of the day. It's 17,211. It's just unable to hold on to its highs, and that's what you can see. About 100 points gone from the top. 17,136 is where we are at currently. So just about holding on to a 90-point gain right now. It is getting very volatile. But after the collapse of Silicon Valley Bank, we have been trying to break it down on what the India exposure could be. We've reached out to several companies to find out whether, they've got hit or not, what the exposure is to SVB. Today, we speak with InfoEdge to understand if they or any of their investee companies have deposits with SVB. And a broader question is what this could mean for the overall startup economy. We still don't have a total figure on what the Indian startup exposure is to SVB and what the ramifications would be. Sanjeev Bhikchandani, who's the founder and executive vice chairman at InfoEdge, joins us now to talk about that. Hopefully, we'll get some clarity on what's happening with the startup world. Sanjeev, thanks a lot for joining in. First, for InfoEdge particularly, do you or any of your investee companies have any deposits that are stuck with SVB at the moment? If yes, what is the amount and what's the way forward according to you?
So none of our balance sheet investee companies or our subsidiaries have any exposure to Silicon Valley Bank. Okay. InfoEdge does not have any exposure. In any case, the FDIC has said all the deposits are guaranteed and they will all get the money. It is possible in our VC fund, a few did have, some may still have some exposure, but if all deposits are guaranteed, there should not be a problem. Now, the thing is that this was obviously asset liability mismatch where the bank management was wrong-footed, a few wrong calls. They were wrong-footed by the interest rate increases. They were wrong-footed by the balance sheet contraction, and they were wrong-footed, therefore, by the fact that they had invested in long-term bonds and there were short-term withdrawals. When startups began to withdraw money because they were burning and they were able to get external capital, they obviously withdrew from the bank, and that caused a problem. This was, I would say, a near miss. The FDIC has done well to guarantee the deposits because this will limit the panic and contagion as far as other small banks are concerned. Yeah.
Okay. Just to follow up,
Sanjeev, I think the disaster has been averted.
Sure. The disaster has been averted for now. Just to follow up to what you said, so you said that none of your investee companies have an exposure, but do you know what the ballpark number would be of the startup ecosystem?
So none of our investee companies from the balance sheet have any exposure to the best of our knowledge. A few of our companies in the venture fund may have had exposure, but they are all okay now. My reckoning was that if you include startups domiciled in India that are VC funded, if you include startups that are domiciled outside India but are from India and have raised VC funding, if you include startups which have got branches and subsidiaries overseas, if you include all of that, maybe 15% of Indian VC funded startups would have had some exposure to Silicon Valley Bank. 1.5.
Okay. All right.
It's a rough estimate. We haven't done a census. We don't know, but it's my rough estimate.
15% of VC funded startups out of India may have some exposure to SVB.
Yeah, but typically most startups will have 2 or 3 banks, so we don't know exactly how much is in which bank and how much money they have.
We don't know the amounts.
So, yeah.
Sanjeev, beyond what you said that the direct level of exposure is low, are there any second level, third order impacts for the general risk aversion to the internet space, to the venture capital space?
So my submission is what it was earlier as well. That look, flipping a startup, domiciling it overseas, you take on a few more unknowns. You don't know the American environment, you don't know the American banking system, you don't know the American legal system, as well as you know the Indian system. So you're taking on risks that you don't know, and in this case, some risk panned out, which you had not anticipated.
Mr. Bhikchandani, a larger question, while you quantified, I mean, roughly speaking, the exposure might be 15%. And I think this is not just to SVB, this is overall US banks, right? You're saying the exposure could be about 15%. What does this do to the overall funding environment? We've had Indian banks quickly rush out to put out press releases and really cajole the industry to come back home with Indian lenders. But what happens? I mean, the funding winter, for instance, cost Info Edge because you had to take a pretty big write-down in the third quarter on one of your investee companies. So does it start a domino chain? Does it get worse before it gets better?
Well, I think it's patchy. It's a mixed bag. There will be some companies which will be under stress. There will be write-offs and write-downs. There could be forced mergers. There could be distressed mergers. But those companies that have got good unit economics and can pivot to good unit economics and have got a serious value prop for the customers, they're selling at a price that's higher than the cost, and they have enough runway. They would actually strengthen. So
but do you see this happening? But do you see this happening in the Info Edge universe as well? Are you anticipating any more write-downs or perhaps, book out of some of these companies or any consolidation within the set of companies that you've invested in?
So we evaluate stuff on a regular basis. Okay, thus far there is no announcement to make. But like I said, it's a portfolio, it's a spectrum. Let's wait and watch and see what happens.
So I just want to confirm, you said that 15% of the VC companies, of the companies in your venture fund have exposure, right? Is that correct?
No, not our portfolio. I said in the
overall
universe.
Okay.
That 15% of VC-funded companies will have some deposits, or would have had some deposits, they may have withdrawn it now, in Silicon Valley Bank.
Okay. Got it. For your own companies, you said some of your companies in the venture fund have exposure, right?
No. None of our balance sheet investments have any exposure, to the best of my knowledge. We have asked them. There may be a few which may have had exposure in the VC fund portfolio, but I guess they're all safe now, so it's okay.
But what would that amount be, ballpark?
I would not be able to, disclose that at the moment.
Okay. Do you have any exposure to crypto companies? Because last time you had said that you would avoid fads like crypto, metaverse, etc. We've seen a huge collapse over there as well. So any exposure that you have there?
I don't think we have any exposure to any crypto company, to the best of my knowledge.
All right.
We have about 80 companies. I don't think any other crypto company.
Okay. Would you have to take any more, just, a follow-up to what you were mentioning earlier. Do you think there would be a chance that you'd have to take some more write-offs, perhaps not, if not in FY23, in FY24? Just asking because of, how challenging the environment is currently.
No, I won't be able to say that currently. But look, thus far at least, nobody's in serious trouble to the best of our knowledge. But look, this is an evolving situation.
Okay, all right. It is. Sanjeev, thank you very much for your time. Pleasure speaking with you, and good luck. Thank you for speaking to CNBC-TV this morning.
Thank you so much.
Thank you. All right. Well, 120 points higher, so after hitting the level, basically the markets reversed exactly from the same level that it reversed yesterday, which is 17,220, got to within a few points of it, and then sold off. So 17,164, this is still a pretty good outcome so far, but let's hope there is more to go here in terms of gains and recovery, basically, recovery and repair. Now, Motilal Oswal note indicates that the upcoming dedicated freight corridors are expected to change the modal mix of freight movement in favor of railways from roadways, and factors such as higher costs of fuel, expensive insurance may give a boost to rail freight in a pretty big way. The DFC, of course, has been debated for years, but now it's coming to fruition. Let's discuss the trends and how managements and companies see this impacting their business. Vineet Agarwal is Managing Director at Transport Corporation.